Manesh Patel with INTF Trade. Today I want to talk about your retirement account, Basic Charting 101. And the reason why you need to do that is you need to validate all the people that are managing your accounts, your retirement amount, retirement account, and so forth. So I want to show you some basic charting methods. This is basic for your guys' information. So here's something I drew up. These are basic candles. Okay, so we're going to look at the monthly time frame where each bar represents 1 month. Do not worry about the color of these bars at all. It does not matter. What really matters is the high and low of these monthly bars. So the high of that 1 month bar is a resistance. The low here is a support. Okay, so let's say you want to buy something like Amazon, Google, or currency, crude oil, anything out there. And this is for investment purposes, more long term. Basic trading with no indicators, just using prior price action, what you want to do is take the previous month, here's the current bar, take the previous month high, add a couple of points, which is that green line, place your buy stop order right there. When you place your buy stop order there, you want to use a conditional stop. The conditional stop will be the same previous month bar. Take the low, minus a couple of points, which would be this red line right there. That will be your conditional stop. So that is your entry order tied to conditional stop. This is your defined risk. Okay. Now, once you're in this trade, what you could do is you could take this conditional order, okay, which is now turning into trailing stop. Every month that goes by, you keep on changing the previous month low, minus a couple of points. That becomes a trailing stop. That is a normal, basic way of trading off pure price action. You should be able to validate your financial advisor and so forth using this method. Let's go to some charts. Here's basic Amazon here. Here's a bar here. Let's say you bought here, and I want to show you a buy scenario here. So if you bought here, initially what will happen is you would sit there and buy, this is the active month, buy a couple of points above there, and then your stop would be here. This would be your define risk right there from 129 to 101. That looks big, yes, it is. And because remember, this is a long-term investment trade off the monthly. Now what happens, you enter here, you want to make sure you close positive the very first month. If so, next month comes here. Next month right there, you end it right there. Then what happens? You stop right there. Every time the end of the month happens, you want to move your stop to the previous bar month low. So here, right there, this is the current month right there. You move it right there. You would get out with a small loss right there of roughly about $4.10 or so forth. So every month you move your stop to the previous month low minus a couple of points. Now you can see there's not being an opportunity here for Amazon at all. So there should be no buying done at Amazon at all. And that's the thing people need to understand. Also over here, let's say you bought right here. A couple of points right there. You bought right there. At the end of the month, if you're not profitable, why are you staying in this trade? You need to be profitable at the end of the first bar that you enter. If you're not, you need to exit the trade completely. Okay? Let me give you an example of something going up. And this is a perfect example here of something that's going up. Look at Merck here. If you looked at this trade right there, and you entered a couple points above there, let me pull out my reward risk tool. I'm going to enter a couple of points right there. My stop will be this monthly low right there, and this is the month I'm looking to enter right there. So if you look at there, that's a $5, that's a $5.16 risk. Okay. At the end of this month here, we were profitable, so I stay in that trade. Now this month begins. Okay. This month begins. My stop is still the previous month's low. Now, when this begins, my stop now goes to here, a couple of points here. So every month, this risk gets lower and lower and lower moving forward. Now, what you also want to do is, whatever your risk is, change your reward risk total to 3 to 1, which is right there. That gives you a 3 to 1 reward risk ratio. That means you get 300% of your risk. That's a good reward risk ratio. So when you get to this point here, don't be crazy. Take some profit and run. Okay? So this is how you could trade the investment way normal with pure price action. Okay? Now, I want to show you a friend's retirement account. This is something that's managed by a fund manager. Tell me one thing. Why would you be buying anywhere in here? This has been going down. There's no buying opportunity in there. There's no buying opportunity in this. This right here, just now we're getting a buying opportunity here. Over here, you're just now possibly getting into a buying opportunity. Here, there's nothing. Here, there's nothing. Here, you're just now getting into buying opportunity. Here, really nothing. Here, nothing. Here, nothing. Here, nothing. Here, you're just now getting into buying opportunity now. Right there. Here, nothing. Here, last month, you got a buying opportunity right there. So if you look at this portfolio that this fund manager has gotten one of my friends in, if you look at the majority of the positions, only 2 out of 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Only 2 of the 14 stocks really had buying opportunities. Everything has been going down, but yet the fund manager is basically buying up these things because they have a dividend. The dividend really doesn't make a difference, because if you look there at the moment here and you look at the dividend, let's say the dividend pays out 10%. Well, it'll hedge you for the stock going down 10%. But if the stock goes down more than 10%, how's that hedging you at all? If you look from here all the way to here, this has gone down 27%. So even with the dividend, you're not really going to get ahead. Remember, these dividends, a lot of them are yearly. So that's 10% a year, okay? And you're getting split among different months. So really, it's not working at all. Trade the dividend stocks and make sure the monthly bars are going up and holding them each previous month low. If you do that, you'll do good in your investment trades. This is basic trading. This is basic price action 101. If you have any questions, you can email me at info@eiicapital.com.